Hello, everyone. Could you please confirm, is my voice audible to each and every one of you?
Yes, please.
All right. So I welcome you all to the first day for TX Game Changer webinar session, in which I will be sharing a lot of insight information about how to handle your exam, what are the do's and what are the don'ts in respect of your examination, and how you will have to prepare yourself in last 10 days before your exam. So there are a few things that I shall be discussing with you people, along with the practice of a whole exam set on the practice portal. I mean, Study Hub practice portal as well. My name is Saniya Asif, and I am your mentor for taxation, which is being held under UK stream. Today is day one of your TX Game Changer webinar session. And by the way, these are the few things that I shall be discussing with you people. I'll be sharing my contact number with you people shortly. And 20 years. So it's been 2 decades since I am in this field of teaching taxation as well as advanced taxation. So, considering the fact that what is usually like by your examiner, how is he going to test the things, which things you really need to focus on, and which things you really need to abstain yourself. These are those things which we will learn by going through the practice set. And before that, I take you to the exam portal, the CBE portal. I would tell you one thing, that what is exact. So ever taken up their TX exam before, and it is going to be their second attempt or the third attempt. You really need to assess yourself that what has been exactly the reason behind your failure. And this would easily be done. This could easily be assessed on the basis of the marks that you had obtained in your attempted TX exam. If in case there is someone who had failed his exam previously and he had not been able to achieve even 45 marks, that would mean that he is literally having a very weak technical knowledge. Maybe he has not covered the whole syllabus, his concepts were not strong, and even in like most of the cases, there is a chance that he has not done with the ample practice. So if there is like any student who did not cover the whole of the syllabus, who might have been done with the selective studies, he might have covered few chapters while left the rest of them. That is like indicating that he had a very weak grip over the concepts. He did not grasp all the concepts related to taxation, and this is like going to be the biggest reason of not passing your exam. And sometimes what usually students do, that they just go through the rules randomly quickly, and they do not do enough practice, instead of like doing 1 to 2 questions from each type of taxation, and that is it. But that is something which one should not do, because with taxation exam, one really need to know that it is something for which you really need to have a very good, not just you should have a good concepts about the syllabus, but your practice should be like very strong, right? So if you haven't done your practice rightly, then this could have been a reason that you failed your exam previously. And see, if someone had not been able to secure 45 marks in the previous attempt, then I would really recommend that he or she should really need to polish their concepts first, do practice on an extensive scale, and he or she might need to have an assistance from the mentor as well. So whosoever the mentor you really need to choose, you may go for, just for the sake of an update, that VIFHE is offering revision classes. They have already been started. You can take enrollment in it. It is being offered at a very subsidized rate, in which you will be given with substantial pre-recorded material And then we will be providing you with the practice set of questions. Then your e-notes and the mock exams, they all will be given to you people, and you'll be enrolled in the enrolled students WhatsApp group, where you will be having an assistance from the tutor as well. So I shall definitely be taking care of all the students who are a part of my enrolled students WhatsApp group. So if in case whensoever you come across any problem, you have any sort of query, you may keep on dropping as many questions as possible, and I'll be happily assisting you. Um, I was like telling that as a part of the revision classes, we will be providing you with the mock exam, out of which one mock exam will be taken under the same exam simulation. It will be checked and you'll be given with the feedback. And this is like going to be something which would contribute towards your success, right? And obviously right now we are having this game changer webinar session, which is like open to each and everyone, and in the end I shall be conducting grand revision session as well. So this is basically an agenda, a schedule related to revision classes, and this one should really need to be a part of it if he or she has not been able to pass their exam previously and obtained less than 45 marks. Well, as right now we are in the Game Changer webinar session, let me just tell you that there are lots of perks associated with Game Changer webinar session, as well as it is like open to each and everyone. I'll be sharing the pocket notes with you people, and I'll be sharing the list of important questions with you all. All right. So if in case there is any student who though had not been able to make it up last time, but at least their marks were lying in between 45 to 49. So if someone had been able to grab in between 45 to 49 marks, that shows that he really has a good technical understanding of the subject. But there could be a chance that he or she had not been able to attempt the whole of their exam, which is the biggest problem behind failing certain exam. I really feel upset about those students who failed their exam at 48, 47, because they were like very close to the target. So by just taking into account, by just taking care of few little things, this thing can be avoided. So you really need to attempt the whole of your exam. You really need to answer your question appropriately. I mean, if there happens to be any descriptive question, for instance, with which examiner says that 5 marks are associated, then you will have to write for 5 marks. You will have to produce 5 valid points. But if the question is of 3 marks, then 3 valid points are sufficient. But in such cases where the question is of worth 5 marks and you are going to produce only 3 valid points, that means you are giving an insufficient response, and which is why, in spite of like having a good knowledge about the concept, you have not actually done the things rightly. You have not handled the question appropriately, and which is why there could be a chance that this became the reason of not passing the paper. And not attempting the paper completely, there is like there are like two other reasons behind it as well, and that is the lack of practice, and that's also of time-based practice, the practice which had to be done on CBE portal. So students, with respect to section C of your exam, which is about constructive response questions, you really need to know that how the questions are to be done on the CBE portal by using their Word document as well as spreadsheet. And you really need to take care of the time associated with every question as well. Because if you are not going to get done with the solution timely, if you do not, if you are not able to manage your time with respect to any question, then eventually what happens is that you end up not completing your exam, and that could be the reason of failure. Okay, and last but not the least at all, students who do not handle their section A and section B appropriately, that actually becomes a reason of not passing their exam. Well, let me just tell you that what your exam pattern is, and I hope that you people already know about it. In your exam, which is going to be a computer-based exam, it is 3 hours long, and it will be having 3 sections: section A, section B, and section C. In section A, you are supposed to handle 15 OTs, 15 objective test questions of worth 2 marks each. So that would mean that this whole section will be carrying 30 marks. And section A, while attempting section A, one needs not to show the working to the examiner. You definitely need to do a working, but whatever the haphazard way, whatever the way you would like to do your working in order to arrive at the answer, examiner has no concern with it. Whether you do not do any sort of working and will be like catching the answer purely on your instinct, that is something which is not going to bother your examiner. The only thing which is relevant as far as section A is concerned is the answer. As long as your answer is correct, then you will get 2 marks for each correct answer. And if your answer is wrong, you will be losing 2 marks. And if your answer is partially correct, even then you will not be able to score anything. So in order to score 2 marks for each OT, your answer has to be completely correct. Then with section B, it will be having 3 OT cases. A comprehensive case will be given, and every OT case will be carrying 5 objective test questions. So altogether, you will have to handle once again 3 into 5, 15 OTs. Again, with OTs, your examiner will just be concerned whether your answer is correct or not. He will not be looking at how you have performed the calculations. Whether you did any calculation or not, that is not his concern at all. All he needs is the perfectly correct answer. Again, this section will be carrying 30 marks. Yes, with section C, now examiner will be concerned with how you are doing the calculation, because on the basis of the workings, you will be awarded marks. So the maximum correct workings you will be showing to the examiner with reference to section C, the maximum number, the higher number you will be able to achieve. So in section C, you will have to handle 3 constructed response questions. The first question will be of worth 10 marks. The second and third question will be of worth 15 marks each. Now, we do not know that from which area our question number 1 will be, but income tax will be tested as a part of question number 2, and corporation tax will be tested as a part of question number 3. So we really know one thing for sure, that income tax and corporation tax will surely be tested as a part of our section C. Maybe question number 1 will once again be covering either the income tax aspects or the corporation tax aspect, or maybe they are like relevant to value added tax or inheritance tax or capital gains tax. But one thing is for sure, that as far as question number 1 is concerned, it will be containing a little bit element of planning aspect as well. So that will be like requiring a certain sort of analysis at a very starting scale, and this is going to be tested as a part of question number 1. As in what kind of planning they might be requiring. Maybe you will be given with 2 employment proposals, and you will have to figure out that in which employment proposal the individual will be suffering with higher tax cost, or he'll be like having higher post-tax proceeds, or maybe they will be like giving you an information that someone is like having multiple assets, and he is like indecisive right now that which asset is to be sold in this tax year and which has to be sold in the later tax year. And then by taking into account of reliefs. You will have to tell whether selling the assets right now will be resulting into a lower amount of taxes, or delaying the sale till future would eventually result into a lower amount of overall capital gains taxes. So this is how analysis based situation will definitely be given to you, will definitely be given to you people. And again, as what I've told you, that it is not the answer that matters, it's the working that matters as far as section C is concerned. So altogether, this part of the question is of worth 40 marks. Altogether, your exam is of 100 marks, out of which passing marks are 50. So whosoever secures at least 50, that person is considered to have passed his exam. Now the thing is that your time is very important. Time management with respect to your paper of taxation is a crucial thing which one really needs to take care of. 3 hours would mean that you have altogether 180 minutes in order to handle 100 marks. So that would mean that in 180 minutes, you will have to complete an exam of worth 100 marks. So technically, you will have 1.8 minute ideally. Ideally, you will have 1.8 minute in order to deal with 1 mark worth of question. Now, the thing is that this is like an ideal situation. So that would mean if you choose that you're going to take a start with section A, and section A is of worth 30 marks in total. And let's say your clock says that right now it is, let's suppose this is like 5:30. Then this would mean that for a section of worth 30 marks, you have 1.8 minute per mark. And that would mean that how many minutes in total do you have for this? How many minutes you think you have for this? 30 into 1.8 is equal to 54 minutes, right? So 54 minutes are altogether there in provided for section A. So you will set a clock, you will set a time. You may write it somewhere on your exam that if it is like 5:30 right now, then this would mean that you will have to get done with section A by 6:24, right? So this is how you will have to like set a target for every section, so that by the time you will be done with section A, if you are within the target, then section B and section C. But if in case by the time you get done with section A and 6:30 on the dial, then that would mean that you have consumed extra time. Now you really need to be a little bit conscious when you are going to handle section B or section C, whatever the section you decide to handle right after that. So only by doing this thing, by setting a standard right at the point of starting a certain section, would actually let you complete your exam on time. Otherwise, if the things are not going to be done on timely basis, then effectively what actually is going to be the situation at the end, that you end up not completing your exam, and it is going to leave a very bad impression on the mind of your examiner. And one more thing, that obviously when you start with section A, there must be like certain questions which are looking fine, which are looking easy to you people. Okay, when you find a question is easy, just do it. If you find any question which is like not making sense to you people, which is like a kind of little difficult, then leave difficult question at a side and jump to the next question. Of course, if you have skipped a certain OT, you will have to take this thing into mind, that you haven't spent like 2 point 6 minutes, because 1.8 is for 1 mark, and sorry, 3.6 minute for 2 marks worth OT right now. And this is like something you should not use if you find a question difficult. And later on, when you are done with all the easy questions, then you have to come back to that difficult question or questions and do them in the end. Because if you just keep on like struggling with the difficult question, you end up wasting a lot of time on the question, for which obviously if something is like giving you a trouble, you will be spending a lot of time on it and actually wasting your time for the rest of the questions for which you can score because they are easy. So the tactic is that you will have to deal with the easy question first and just keep on like skipping the difficult ones, and later on when you are done with the easier ones, then come back to the difficult questions, so that you eventually not be wasting a lot of time with respect to handling those questions for which you are not comfortable, right? So this is how you will have to handle your exam. And see, whosoever is having a good grip over section A and section B, that person shall be able to secure 60 marks in total, and well, that person is said to be considered as like a student who must have passed his exam. So one really needs to focus on section A and section B definitely, which is why I usually ask my students that all the questions which are there in section A and B of your Kaplan revision kit should be attempted. But why am I focusing on Kaplan revision kit? Because it does contain a lot of questions, and these lots of questions have been taken from, I mean, majority of them have been taken from past exam attempt, and they have been adapted according to the latest Finance Act, which is FA 25. If you just go to the study hub, I'll show that to you as well. Not all the papers which are available on the study hub are relevant to you people. There are very few exam attempts which you may handle, which have been adjusted according to the latest Finance Act. So if there is like something which is like not suitable according to the latest Finance Act, then this is like not relevant for you people. In fact, this is something which may ruin your preparation altogether, right? So is there anything else you have in your mind? If yes, then please let me know. Till now, I have told you that what is basically your exam pattern, how you will, what strategy you really need to opt while handling your exam. And if it is not going to be your first attempt, and you have already taken your TX exam before, then on the basis of marks you scored, you need to assess yourself that in which direction you will have to re-prepare yourself. All right. Now, students, do you have anything else in your mind which you want to ask me? If yes, then please let me know. Divide the timing for other sections, like just as how I have told you that section A would be requiring 54 marks altogether. I mean, sorry, 54 minutes altogether. Similarly, as section B is of worth 30 marks in total, so you really need to spend maximum 54 minutes. And for section C, as it is of worth 40 marks in total, so 40 into 1.8, that would mean that you have got 72 minutes in order to deal with section C, and that's how you will be able to complete your exam in 180 minutes, I mean, in 3 hours. So 72 minutes would mean that you have 1 hour and 12 minutes. While with section A and B, you have like 6 minutes less 1 hour in order to get done with all of the OTs and OT cases in this way. Okay. There is a question that first attempt for me, is it sufficient to make Kaplan question once? Yes, that's sufficient as long as you will be doing section A and B completely. And well, I have told you people this thing in the start that I'll be sharing the list of important section C questions with you people. And if you will not be able to do all of the section C questions, rather you'll be going through selective questions, that's perfectly fine. But if you have time, you may do all section C questions. And obviously, doing the kit just for once, that's sufficient. But maybe a day or two before, you'll be like doing few random questions for the sake of like preparing for the exam as well. Obviously, just how students usually do that, they will have to go through, they are not in a position to do each and every question, but they just randomly go through few questions related to each and every type of tax, right? Okay, so before that, we start with our practice. One thing which is like very much motivating, that TX has got the highest pass rate amongst all of your applied skills papers. So, bearing that thing in mind, that this is an easy paper, you shall have to prepare yourself, you will have to deal with the exam. Do not upset yourself by looking at the course of TX, because I know it is like quite comprehensive. You really need to learn a lot of rules, you really need to store a lot of information in your mind. But at the end of the day, hard work will surely pay off, because the questions which are tested in TX exam, they do not uh, uh, turn out to be the alien sort of questions. Whatever the question you will find in your exam, its pattern, its wordings, you will find that this is like something which you have already gone through. I mean, and this feeling can only be achieved if you are done with the practice, and practice should be done from Kaplan revision kit, right? Okay, so I'm just going to take you to the study hub. First of all, this is your TX paper under UK stream. And I just really want to show you one thing. See, I am gonna take you to the practice platform, where I will show you that there are lots of practice sets available for taxation, but there are very few which you can use, which you need to go through. Though you may do a lot of practice on Study Hub by just picking up the question from your revision kit, in which all the updated questions are given, and then doing the solution on any random spreadsheet or the Word document, because this is how you will be able to prepare yourself perfectly for your exam. But okay, so I'm just going to browse the all available exams for taxation UK. Could you see that there are literally a lot of exam sets available? There are altogether 12 exam sets, but out of which, if I talk about this one, September December 24 attempt, this is an old attempt. In this, the rules related to FA24 got tested. So is the case with this June 24 attempt. And this is like literally an older version, as Finance Act 23 was being discussed. So this like first two are also old attempts. Their questions are set according to the previous Finance Act, and their solutions have been adjusted accordingly. I mean, they have not been adapted according to the latest standard. But yes, if I just have a look at the specimen exam, it is according to FA25, and so is with UK Practice Exam 2 and Practice Exam 1. And by the way, I'll be discussing Practice Exam 1 with you people. And then this is like a blank workspace, which you may use for any question. I mean, just open it, take any question out from your kit and start solving it on the spreadsheet or the Word document. It is like going to give you a feeling as if you are doing your question, you're practicing your question on the study hub. It will not be like containing any question, but the question source has to be found by you. And then these two attempts are also old, but this one is like very important. TX UK pre-June 26 mock exam. You can do it, but all those students who are already enrolled at VIFHE, let me just tell you that this is the same exam that I'll be allocating you people on the day of mock. and this is like going to be checked by me, and I'll be giving you a detailed feedback. So I think just leave it till the day of mock. But if you people are not enrolled, you may do this practice set as well. So literally out of all these available sets, there are just 4 sets which are relevant to you people: the specimen one, the practice exam set 1, 2, and the pre-June mock. Okay, I am just going to assign myself with practice set 1, which I think I have already assigned. Yes. Now let me just quickly take you through the exam set, and then we'll start with the questions. In the start, the instruction sheet will appear. And see, usually the examiner is like going to give you 10 minutes for the sake of going through these instruction sheet. But see, try reading out these instructions right now, so that you will not be receiving any sort of surprises later on the day of your exam. Do not leave it on that day. So this is how all the relevant exam instructions, which you really need to be careful about, they are given on this sheet, for which you people already know about. But so this is how, which application you may use for the sake of like getting a desired result and all. This is like given, and this is how the marks distribution for section A, B, and C are given. And see, once you have gone through the entire instructions, then this dialog box will appear that are you going to begin your exam. If 10 minutes are passed, then you may click on yes, and your exam will definitely start. And sometimes it may even start a little earlier. So once you've gone through the instruction, you click on yes, and your exam will start. Here is section A, and I have told you that in section A, you will be having 15 OTs. And by the way, this is something which I shall have to discuss with you people right now in today's, but section A is definitely going to be finished in today's session. And while going through section A and hopefully through section B entirely, I shall tell you that which how you will have to handle a certain OT or OT case, though there is like no standard format for doing this thing, but how you will be like training your brain for the sake of doing something. This is, can you see tables? If you just click on it, it is like giving you a CR help, I mean, constructed response questions help, the tax table and exam instruction, if in case you haven't gone through exam instructions before, so you may go through it again. This is the tax table. So there are certain rules and the percentages which examiner has provided for you people. So this is like something you may use while doing your questions. And if you want to know that which exactly rates or rules will be given to you people, you may simply open up this sheet, or this sheet is given in the start of your revision kit as well. So you may precisely know that which values, the percentages, or the rules will be provided by the examiner to you people in your on your exam day, right? But apart from this sheet, each and everything has to be learned by you properly. Okay. So this is quick straight away quickly go to the desired question which you have left unattempted. This is something totally for uh, difficult questions, and so that you Students, is my voice audible? Students, can you hear me? Okay, so I was just telling you that this is how you will have to deal with section A, and you really need to be familiar with that which tabs you need to click in order to get a required result, right? So this is like on just a minute. What about now? Is my voice clear? All right, do update me if anything happens in between. Um, okay, so I'm just going to take you to this practice set, and let's see that what exactly the problems we as students will face while handling a certain question. Precisely, this activity is more about refreshing your concepts related to different types of taxes, as like almost all types of taxes are tested with section A and section B, but the tendency of CGT, I mean capital gains taxes, inheritance taxes, national insurance contribution, pension implication, and VAT, this is like having a higher tendency to get tested either as a part of your section A or section B questions, right? All right. So starting with section A, obviously, though the target is to complete section A in 54 minutes, but right now it might be a little bit difficult. Why? Because obviously, I being a mentor, I shall try to let you people understand the concept as well, and it will be a time-taking activity because not all the students would have covered their syllabus till now. Not all the students are done with the practice. So this time efficiency can only be achieved if you are done with the syllabus and you have got a good grip over the practice already. And this is something which we tell students that you really need to equip yourself with sufficient practice so that on the day of your exam, you will not be hesitating on each and every question and you will be able to secure this time bound activity as well. Okay. In most of the exam center, usually students are provided with external sheet, which is like an easy thing for the sake of doing a little bit random calculation for the sake of arriving at an answer. But if in case you people are not given with any loose sheet, then you may use the scratch pad for the sake of like doing random calculation to arrive at the answer for your section A and section B. This scratch pad will not be checked by your examiner. Even if you don't do anything on it, this is like not creating any concern at all. Right now, I am going to open a Word document. Why? Because obviously, for the sake of like letting multiple students know that what exactly the concept is, for me as a mentor, it is easy to show you the calculation on Word document, right? So this is the first question in front of you. Kindly read the question and then I'll discuss the solution with you people. Kindly read the question. All right, I hope that you people must have gone through the question. Um, Now it is said that on 1st of July 2024, Samir made a cash gift of 2,500 to his sister. And then the gift was made on 1st May 25 and later on 1st of June 2025, right? And he has not made any other gift apart from these gifts. In respect of his cash gift of 50,000 to a trust, now what is the lifetime transfer of value for IHT purposes after taking count of all the available exemptions? So a transfer of value after exemptions would mean that he wants to know the chargeable amount of gift. So when it comes to inheritance tax, you will have to handle all the things in a chronological order, I mean, in a date-wise manner. So the first gift was given on 1st of July 24. This date is falling in the tax year 24-25. And what the transfer of value was, it was of 2,500 pounds, where the gift to his sister was made. Okay, so if that was the transfer of value, first of all, I need to think about small gift exemption, because in all such cases where the gift to other individuals are made, which we call as potentially exempt transfer, I mean pet in the lifetime, we really need to see whether the gift is of small in worth, if it is of 250 pounds or less than that. As in that case, it will be considered as an exempt transfer, but that's not the case over here. Then in case of pets, we need to consider about the marriage exemption, as if the person to whom the gift is being made is getting married and for the sake of his marriage, the gift is given to that person, then marriage exemption shall apply. But that's not the case over here, as this thing has not been mentioned. So I shall deal with the annual exemption. An annual exemption for both the current year and previous year will be available. As if the annual exemption for the previous year has not been used, then I'll be using it over here. And see, as no other gift has been made before, that would mean that his annual exemption for every past year is left unconsumed. But we will not be thinking about the old leftover figures for annual exemption. It's only the annual exemption for the immediate previous year. If it has not been used, then it will be taken into account. The annual exempt figure is of £3,000 for each year, and we will always be picking up the current year annual exemption first. So for the current tax year, it is of £3,000, out of which I will be using only £2,500. And what is the chargeable amount of gift? I mean, the transfer of value after exemptions, that is zero. Now, when it comes to the second transfer, which was given on 1st May 25. So this is how the tax year is changed. See, though in tax year 24-25, we could make use of the leftover annual exemption of the previous tax year, which is 23-24, but we couldn't get an opportunity to use it because we had we had taken into account the current year annual exemption, which was like sufficient for us. And even we did not use our current year annual exemption figure completely. £500 out of the current year annual exemption. This is like something which is like left behind. This is also left unused. Now move to the second transfer, which was made on 1st May 25. So 1st May 25 is the date which is falling in the tax year 25-26. And here the transfer is made to a friend. So again, it is a pet. a potentially exempt transfer as transfers in the lifetime when they are made. We need to categorize them either as a pet or a CLT. And this was a cash gift of £2,000. So £2,000 was said to be the transfer of value. Small gift exemption is not applicable. Even the friend is not getting married, which is why it is not eligible for marriage exemption. Then we need to deal with the annual exemption. And again, we have current year annual exemption as well as the previous year leftover annual exemption. But the annual exemption for the tax year 23-24 is not in a usable state right now. When I use the current year annual exemption, instead of 3,000, only £2,000 will be sufficient, and the chargeable amount of gift will be zero, or in simple words, the transfer of value after exemptions will be zero. Again, in the same tax year, on 1st of June 25, another gift was made to trust of worth £50,000. Well, with 50,000 being the gift made in the same tax year 25-26, see, this is being made to a trust, so it is called CLT. And in case of CLT, neither you will be thinking about small gift exemptions, nor you will be thinking about marriage exemption, because these two exemptions are not relevant to trust gifts. It's just the annual exemption for the current tax year and the previous tax year, which you may use. Now, when it comes to the current tax year, out of 3,000, £2,000 has been used in the current tax year as they were being allocated on chronological order. So annual exemption up to £2,000 has already been used. So we may use only £1,000 being the leftover figure for annual exemption. And then annual exemption for the previous tax year will have to be used, as from 24-25 we had not been able to use an annual exempt figure of £500. So how much of the value is going to be left behind? That is of £48,500. This is called the chargeable amount of gift, or in other words, the transfer of value after exemptions. This is the value on which we will think about calculating the taxes. But obviously against this figure, we will first be adjusting NRB, and then later on the taxes are to be computed. But here I just had to determine this amount. So 48,500 is the answer. So you're just going to click on the bubble. And if you're going to take up this exam as a very first exam of ACCA, you know that thing that, for instance, if you later on want to change your answer, you may just bubble on any other option and the previous bubble will be over. But I just hope that you will always be clicking on the right bubble. So it's 48,500 being the correct answer, right? I'm just going to move to the second question. And if in case later on you find any difficulty in any question which you think needs to be addressed furthermore, then please let me know. Okay, so this question is there in front of you. It says that on 31st of March 26, Angus sold a house which he had bought on 31st of March 2012. And then he occupied the house as his main residence until 31st March 2017, when he left for employment abroad. Angus returned to the UK on 1st April 2019 and lived in the house until 31st March 2020, when he bought a flat in a neighboring town which became his main residence. Now you need to tell that what is Angus' total number of qualifying months of occupation for PRR, private residence relief, with respect to the sale of the house. All right. So whensoever a main residence is sold, if it is elected as a private residence, then with respect to the period of occupation, the portion of the gain will be exempted, and the period of occupation will be based on both actual occupation and deemed period of occupation. So I just need to know what the period of occupation is, because higher the period of occupation, then higher will be the PRR figure. The higher exemption will be achieved. Okay, so have a look at the start. this house was acquired on 31st March 2012, and he occupied the house till 31st March 2017. That makes up how many years? From 31st March 12 till 31st March 17. That makes up 5 years. Okay. And it is like quite better if I convert the calculation in months. So 5 into 5 years, each year will be having 12 months. So 60 months is about the period of, sorry, period of occupation. And this is not the deemed period of occupation. This is not something I'm assuming. This is the actual period of occupation. Well, then what happens is that he left for employment abroad. If someone is sent abroad for the sake of doing employment duties, then for whatever the period he has moved abroad, that period will be regarded as deemed period of occupation, provided before the period of absence and after the period of absence, he must be actually occupying the house. So somewhere before getting absent, yes, he was living in the property and he then returned as well. So the period in between them, if he has left for overseas country for the sake of employment, that is considered as deemed period of occupation. And when he return on 1st of April 19? So it's like from 31st March 17 till 1st April 19. That would be making up, I believe, 2 years, right? So for 2 years, he was sent abroad, though he was actually absent, but he will be considered as occupied the property on deemed basis. So 24 months will be regarded as his deemed period of occupation. And then when he came back on 1st of April 19, he lived till 31st March 20, I mean for 1 year. And then he bought a flat in a neighboring town, and then it became his main residence. And finally, the property was sold on 31st March 26. So that would mean after coming back on 1st April 2019, he stayed in his property till 31st March 20. That makes up 1 year. So 12 months are to be treated as period of actual occupation. And finally, the property remained vacant from 1st of April 2020 till the date it was sold, as it was sold on 31st of March 2026. So for how long the property remained vacant? It is like 6 years, right? So 6 years would mean how many months? Can you please tell me for how many months the property is said to be in a vacant position? 72 months. And there is like another rule that before the date of disposal, last 9 months will always be treated as deemed period of occupation. So 9 months are always treated as deemed period of occupation, and the remaining months, 72 minus 9, that is 63. So 63 months will be treated as period of non-occupation. So I'm just going to add up all the periods in which the individual, I mean Angus, was either treated as actually occupying the property or occupying it on deemed basis. Could you please tell me the total? What is going to be the total period of occupation? 60 plus 24 plus 12 plus 9, that makes up 105 months. So 105 months is said to be the period of occupation, and 63 well is the period of non-occupation. If you take a grand total, then it will become equal to period of ownership. So this would be like 168. And PRR is applied by picking up the gain and multiplying it with the period of occupation over period of ownership. But here the thing which has been asked in the question, that how many months are considered as qualifying, I mean relevant for claiming private residence relief, and this is like dependent upon period of occupation. and that's 105 months. Is that clear? And now I think my voice is going smooth. Why is not 72? 72 is just the actual period of occupation. And the period of occupation which we use for the sake of calculating private residence relief is a sum of actual period of occupation as well as deemed period of occupation. Both will qualify for the relief. So whenever they are asking about the period of occupation, it is a combination of both actual and deemed period of occupation. All right, now this is the third question. Kindly read the question, and I'm giving you 1 minute in order to go through it for reading and mapping it out. That what do you think? What has to be the answer, or at least how the answer needs to be assessed? Okay, so it is said that Abina has made the following gross contribution to her personal pension scheme over the past 3 tax years. If someone has joined the personal pension scheme, it is the gross contribution which count towards relief. In the tax year 22-23, that was of £42,000, then £47,000 for the tax year 23-24, and later it became £48,000 for the tax year 24-25. Now, what is the maximum gross contribution which Abina can make to her personal pension scheme for the tax year 25-26 without giving rise to an annual allowance charge? Okay, as we all know that the maximum contribution that has qualified for the relief will not be crossing annual allowance threshold. Well, annual allowance figure for the current tax year, which is the tax year 25-26, is of £60,000. For the previous tax year, the annual allowance figure was same, and so was the case for the tax year 23-24. But it was different for the tax year 22-23. It was £40,000 back then. And one may use the annual allowance figure for the current tax year as well as any unused annual allowance figure, which is like left unused for the previous 3 tax years as well. Now, starting from the tax year 22-23, I need to see that if Abina has been a part of pension scheme, because if someone was a part of pension scheme, then we will count their annual allowances. Otherwise, if someone has not joined annual allowance in the past, we will not say that their annual allowance is like completely unused and it is going to be transferred altogether. No, this is not the case. But she seems to be a contributor since 2022-23, and what gross amount she had contributed, £42,000, for instance. If her employer had contributed as well in the personal pension scheme, which happens rarely, but it may happen. So the contribution made by employer is counted towards an exempt benefit, and it is also counted towards the limit of annual allowances. So that's of £42,000. See, if she had contributed £42,000 completely, then not just she had used the annual allowance for the current year, but if she was a member of pension scheme previously as well, and there was like left any value unused, then she may make use of that leftover figure of annual allowance as well. But we do not know the story about the past tax years, I mean the tax year prior to 22-23. But one thing is for sure, that Abina has completely used her annual allowance figure for the tax year 22-23. So if someone asked me that if any leftover annual allowance is there with respect to 22-23, I would say no. Then how much of the contribution was made later in the tax year 23-24? That was of £47,000. This is the gross figure. And against £47,000, of course, the current year annual exemption of £60,000 for the tax year 23-24 was used. and she had not used the annual allowance figure completely, £13,000 was left unused. And then there came, sorry, I am just going in the wrong direction. It was £42,000 for the tax year 22-23. Oh, this is by chance going great. So for 23-24, that was 47,000. And then later for 24-25, it was 48,000, right? So £48,000 was the gross contribution that qualified for relief in the tax year 24-25. The current year annual exemption figure had to be used first, and the leftover annual allowance figure can be used for the next 3 tax years. So what is the leftover figure? Out of 60, only 48,000 was used, so £12,000 was left unused. Now, in this tax year of 25-26, how much contribution she is making, this is not told, but the point is that she wants to make the maximum gross contribution, and that's so without like crossing the annual allowance value, that's so without incurring any tax liability, any annual allowance charge to be paid to HMRC. So it's like £60,000 is the annual exemption available in the current tax year, and she may make use of the annual exemption of 12,000 and 13,000 as well. So that would mean that if she contributes £60,000 in the current tax year, she will avail the annual allowance with respect to current tax year. And if 12,000 and 13,000 additionally are going to be contributed, then she may make use of the leftover annual exemption for the 3 tax year as well. So altogether, how much of the gross contribution she may make right now, and that's so within the annual allowance limits, that is going to be of £75,000. Sorry, £85,000. Yes, you're right. It's of £85,000. 60,000 plus 12,000 plus 13,000, that makes up £85,000. And if she does so, the whole of her contribution, which qualified for the relief, will be covered under annual allowance, and she will not have to incur any tax liability. She will not have to pay back any annual allowance charge. So this option is correct, right? Okay, quickly moving towards another question which says that Triangle Limited is registered for VAT and uses the annual accounting scheme. For the year ended 31st of December 25, the net VAT payable, I mean input and out, the difference of input and output VAT was £73,500, and for the year prior to that, the net VAT payable was £47,700. Indicate by clicking on the relevant boxes in the table below the number and the amount of monthly payments on account of VAT which Triangle Limited must make in respect of the year ended 31st December 25 prior to submitting his VAT return for that year. Okay. See, whosoever joins annual accounting scheme, if they are talking about annual accounting scheme and their year is year ended 31st of December 25, as with VAT annual accounting scheme, the year can be from January to December, it can be from April to March, it can be from July to June. It all depends that when you join the annual accounting scheme. So that year is like important. During the year, one shall be making 9 installments, and after the end of year, within 2 months, the last installment shall be made. So altogether, we will be paying taxes in 10 installments, 9 during the year, and the balance will be paid within 2 months after the end of the relevant accounting period. According to the question, it says that the number with respect to payment on account which Triangle Limited must make in respect of year ended prior to submitting its VAT return. So if students would subconsciously click on 10, then this is wrong. Why? Because they say before submitting the VAT return, and the VAT return is like submitted along with the final installment. That would mean that apart from the final installment, how many installments must have been made, which are the payments on account, which are based on um, like in estimation based installments, and that is 9. The 10th, the last, the final payment which is given to HMRC within 2 months after the end of the year along with the VAT return filing, that will be like carrying the balance. That will be like carrying the leftover figure of VAT which needs to be submitted to HMRC. And during the month, how many installments we make? 9, and they are dependent upon 10% of the last year's VAT payable figure. As last year's VAT payable figure was 47,700, it's 10%. It's 10% shall be paid in each installment. So 47,700, 10% is 4,770. So this is the amount which we shall be paying 9 times during the year, and then the final amount will be paid. As during the year, we must have paid 9 installments of 4,770. And finally, the current year VAT payable turns out to be 73,500. So the balance figure is 30,570, which will be paid to HMRC along with the final along with the final payment, which is called the balancing figure, not the payment on account. And that's the date on which VAT return will be filed as well. So 9 altogether payments on account will be required, though there are total 10 payments, but they are not talking about the last one. Except for last, the estimation oriented payments are being asked over here, and that is of 4,770 each. Now we are having another OT which says that Paloma has been trading for a number of years. Her tax adjusted trading profit for the year ended 31st March 25 with 57,000 pounds, and for the year ended 31st March 26 was 55,000 pounds. What is the amount of class 4 NIC payable by Paloma for the tax year 25-26? First of all, every self-employed person shall be making accounts according to their choice. They may make accounts from April to March, from January to June, from January to December, from July to June. And then according to the rules related to basis of assessment, we will figure out that how much of the profit will be like relevant to any tax year. And then for that tax year, every self-employed person shall be bearing class 4 NIC, which is like dependent upon their earnings, which is like dependent upon their tax adjusted trading profit. So when I open the tax tables, I will definitely find the rates related to national insurance. So class 4 NIC rates are there. If someone is having an earning of up to 1,2,570 per year, and self-employed person's earning is tax adjusted trading profit up to 12,570 pound, there is said to be no NIC. Then from 12,571 till 50,270, that actually means the next 37,700, there is said to be an implication of NIC class 4 at the rate of 6%. And on an earning which is found in excess of 50,271 pounds, there's going to be an additional NIC of 2%. Well, Paloma has made accounts for year ended 31st March 25. First of all, the profit needs to be adjusted, and luckily it's an adjusted figure. And now I find the tax year. This whole accounting period will be falling in the tax year 25-26. Sorry, 24-25. And then when it comes to the year ended 31st March 26, it was of 55,000 pound. And this is the profit which will be falling in the tax year 25-26. And you are asked to determine class 4 NIC for the tax year 25-26. So class 4 NIC profit is, tax year 25-26 is having a profit of 55,000 pound, for which class 4 NIC shall have to be calculated. All right. So having an earning of 55,000 pound, on first 1,2,570, there is said to be no NIC. Then on next 37,700, I mean from 12,571 till 50,270, that makes up 37,700. There is said to be an implication of 6% of NIC. And then on the excess earnings, as 55,000 is the profit, is an earning on 12,570 and 37,700. That means on on a value which is found to be in excess of 50,270 pounds, there happens to be an implication of NIC at the rate of 2%. Could you please tell me what actually makes up 6% of 37,700? And well, on an earnings which is found to be in excess of 50,270, we tend to apply the rate of 2%. Can you please tell me what is 2% of the excess earnings? $95 altogether. Okay. So what is going to be class 4 NIC for an earning related to the tax year 25-26? That's going to be of in total 2,357 pounds. Now just have a look at it. The first option is correct, right? Here comes the next OT. It is OT number 6. We need to identify by clicking on the relevant boxes in the table below whether the following statements are true or false. Corporation tax is a direct tax on the turnover of the companies. Keep one thing in mind that apart from VAT, all other types of taxes are direct taxes, as the relevant body or the entity or an individual shall have to pay directly to HMRC. But corporation tax is imposed on the taxable profits and not on the turnover. So half of the statement is correct while half is wrong. So altogether the statement is incorrect. So this is a false statement. Then it is said that national insurance is a direct tax suffered by employees, their employers, and self employed persons on earnings. Yes, on the basis of earnings, NIC shall have to be paid. And then inheritance tax is a direct tax. Yes, correct. And it is like imposed on the transfers of income by individual. Not just the transfer of income, transfer of any asset will lead to an implication of inheritance tax, any asset, not just income, if there is like no consideration involved. So if it is or restricting it to the passing of income only, then this statement is false. Then it is said that VAT is a direct tax. Okay, so the statement goes wrong in the starting point, though it is like applicable on the supply of the goods and the services made. Though the later statement is like correct, but considering the first part is incorrect, so altogether I take it as a false statement. Is this thing clear? Now I'm going to show you another question and giving you people 1 minute, in fact, 2 minutes in order to go through the question and let me know that according to you, what has to be the answer. So I have received 3 answers. Uh, According to them, 2 are in a favor of option C, while 1 is in a favor of option D. Okay, let's see that what exactly the correct option is. And I really want all of you to participate in this. Believe me, um, this is like a good way of understanding the things if you participate in such conversations, because see, right now we are not exactly judging someone, and we are not deriving any sort of result out of it. So this is like a practice session, so one really needs to participate actively. Okay, so it says that which of the following statements concerning self-assessment tax returns for individual is true? And that is option C. As whosoever is like having a tax figure of less than £1,000, even if they do not have any taxable income, they will have to file their return even with nil income, right? So the thing is, if you are generating any income from a source, and whatever the tax liability it turns out to be, you have to file a return. And whether the HMRC gives you a prompt or not, I mean, whether they serve you with the notice of filing a return or not, you shall definitely be required to file a tax return. And in your return, you will be like you calculating the income taxes, the capital gains taxes, as well as class 4 NIC. Well, class 1 NIC needs not to be shown on the return. So whosoever is like going to file their return on time, if they have calculated the tax themselves, then that's perfect. Otherwise, they will have an option of HMRC to calculate tax liability on their behalf. So only the third statement is correct. Okay, now we are having another OT in which it says that in certain circumstances, an individual is automatically not resident in the UK. Indicate by clicking on the relevant boxes in the table below whether the following two individuals satisfy or do not satisfy the test to be treated as automatically not residents in the UK for the tax year 25-26. Eric, who has never previously been resident in the UK in the tax year 25-26, he was in the UK for 40 days. And Fran, who was resident in the UK for 2 tax years prior to the tax year 25-26, in the tax year 5-6, she was in the UK for 18 days. Okay, so keep one thing in mind, that from automatic tests, we will have to identify that which person is going to be treated as a non-UK resident person for the tax year 25-26, and that's so on an automatic basis. So whosoever has not been resident in the UK, or maybe who has been resident in the UK in either of the previous 3 tax years before the tax year in question, and he's like living less than 16 days in the tax year, that shall be automatically treated as a non-UK resident person. And if however there is a person who has not been resident in any of the previous 3 tax years before the current tax year, and he's going to live for less than 46 days in the tax year, that will be automatically treated as a non-UK resident person. Well, there is like third condition for an automatic overseas person as well, where a person who is working abroad and he is like not going back to UK for a period of more than 90 days in the tax year, that is also considered to be an automatic non-resident person. But no such individual situation has been mentioned over here. So with respect to Eric, he has not been previously resident, and in this tax year, he is there in the UK for less than 46 days. So he is like satisfying the automatic non-UK resident person. Fran, who has been like resident in the previous 2 tax years prior to the tax year 25-26, if on these basis he would be like living for less than 16 days, then he'll be treated as an automatic resident person, but he's like living in UK for 18 days. Maybe later on, when we probe down, then considering the number of days he has spent in the UK and how many ties he has with the UK, maybe in the end we declare that he is also an overseas resident person. But one thing is for sure, that on automatic basis, he is not going to be the one. On automatic grounds, he is not going to be treated as a UK resident person. So he doesn't satisfy the automatic test for a non-UK resident person, right? Now we have another OT which says that Max is employed by Star Limited on 6th of April 24. Star Limited provided Max with a camera for his personal use. The camera, the asset has had a market value of £2,000 on 6th April 24. On 6th April 25, Star Limited gave the camera to Max for free, and the camera had a market value of £1,400 on 6th April 25. Now, what is the Max taxable benefit? See, this type of OT is called drop down menu, in which you are going to drop the menu and selecting the correct option. Well, Max is an employee in the company. He was first given with an asset to use for non-job related purposes, and later on he was transferred with the ownership of this asset. So what will we do? First of all, I am going to calculate the benefit for the use of asset, where market value when it was given for first time use shall be taken into account. But why am I calculating the use of asset benefit? Because I have to calculate the benefit for the tax year 25-26, where in the start of this tax year, Max was given with the ownership of the asset. See, I'm calculating the use of asset benefit just because the desired benefit will be requiring such calculations. So what has happened in the previous tax year? He was given with a camera having a market value of £2,000 at the point of use. So 2,000 is the market value for first time use. When he was using the asset, 2,000 into 20% has led to the calculation of the benefit. It is of £400. This was like treated as his benefit with respect to use of asset for the tax year 24-25. Now in the tax year 25-26, he is given with the ownership of asset, for which I have to check two things. Market value at the date of transfer versus market value when it was given for first time use, less benefits that have already been assessed previously. Now, the thing is, this is basically the rule of assessment of the benefit for second-hand assets. Those assets which the employee himself had made use of. So Max himself had made use of this asset before, and now he is being given with the title of the asset. So this is about the transfer of second-hand asset. Now, what is the market value of the camera that is being given to him on 6th April 25? That's of £1,400 versus market value when it was given for the first time for use purposes minus benefits that have already been assessed, on which he has paid the taxes before, that is of £1,600. So out of 1,400 and 1,600, we shall pick up the higher value, and the higher value is definitely £1,600. And this benefit is never month portion. And if any contribution has been paid by employee at the time of transferring of the ownership of the asset, then it is going to be deducted. Let's have a look at this. According to the question, I believe no contribution was given by Max. It was, in fact, it is said that it is given to Max for free. Otherwise, the contribution would be deducted from a selected higher figure. But as it's not the case over here, so this £1,600 shall be treated as taxable value of benefit for the tax year 25-26. So I've dropped the menu and I'm going to select the correct answer. Okay, now we are having 10th OT, it says that Cora made a cash gift of £300,000 to her niece on 30th April 20. Then she made a cash gift of £500,000 to her nephew on 31st May 21. So this has happened back in the tax year 2021 and 21-22. And both of these amounts are stated after deducting available exemptions. I mean, all the annual exemptions and the marriage exemption, whatever the relevant exemptions were, they have already been deducted. So I can call it as the transfer of value after exemptions or the chargeable amount of gift. Okay, and then she subsequently died on 31st of October 25. See, she has given two gifts in her lifetime. They were lifetime transfers and they both were pet because they were given to individuals, though different individuals, but they were given to individuals in the lifetime. So they were pet, potentially exempt transfer in the lifetime. And if after giving away the gift, she dies within 7 years, then death IHT on lifetime transfer shall have to be calculated. For the sake of remembering that the first asset was given back in the tax year 20. This is like 30th April 20, so it is falling in the tax year 2021, where the transfer of value after annual exemption figure was of £300,000, and it was a pet, it was exempt in the lifetime, and later in the tax year 21-22, another gift having a transfer of value after exemptions, I mean, chargeable amount of gift is of £500,000, but again, no tax was paid in the lifetime because it was pet. Now, as Cora died on 31st of October 25, I need to check how many transfers are falling in 7 years prior to the date of death because they are now becoming chargeable as a result of her death. So 31st October 25, 7 years before this date shall be starting from 31st of October 2018. And well, if I have a look at the dates, both of these dates are falling in 7 years prior to the date of transfer. Of course, I will have to deal with in a chronological manner. The first gift is having a gross chargeable amount of £300,000. On this value, in case of pet, the chargeable amount of gift is considered equal to gross chargeable amount of gift. Why? Because in case of pet, there is no tax involved in the lifetime. So whatever the chargeable amount of gift is, that is considered equivalent to gross chargeable amount. On this asset, one has to calculate, on this transfer, one has to calculate, one have to calculate the death IHT on lifetime transfer on preferable basis, and then we have to move towards the second transfer because they are to be treated in a chronological manner. But the point is that why would I be calculating death IHT on lifetime transfer on the first asset? Because this is something has not been asked in the question. But by not asking in the question doesn't mean that the tax wouldn't have been calculated on it. Keep one thing in mind that this became chargeable first, on which NRB must have been utilized. And for the sake of like calculating death IHT, it is always the NRB of death year of the tax year of death, which is like relevant. But I'm just going to calculate tax, inheritance tax, precisely death IHT on lifetime transfer with respect to the gift given to a nephew. So now picking up the gross chargeable amount, £500,000. Against this, I am going to deduct NRB. NRB of the year of death is £325,000, but it needs an adjustment for the last 7 years. Last 7 years prior to the date of gift will be important. Now the date of gift is 31st May 21. 31st May 21, 7 years before this date shall be starting from 31st May 2014. If there has happened to be any chargeable transfer made in the last 7 years, its GCA shall be affecting our NRB. So in the last 7 years, only one gift is falling, which was exempt in the lifetime but became chargeable upon death. And see, when we look back, if any asset has ever been chargeable, when we look back at the point of calculating death IHT, and any asset which has transferred in the last 7 years has ever been chargeable, just like the case over here, its GCA is definitely going to hit our current NRB. The GCA of the previous transfer is 300,000 pound. So how much of the NRB is still left? That is of 25,000 pounds. Okay. So after deducting the available figure of NRB, I need to see that how much of the value is left behind. And whatever the value is left behind, that is said to be a taxable one on which death IHT on lifetime transfer shall have to be calculated. Death IHT on lifetime transfer is always paid by donee, the recipient of the asset. So nephew is responsible to pay off the taxes, and it is always paid at the rate of 40%. Could you please tell me what actually makes up 40% of 475,000 pounds? Thank you. It's of 190,000 pounds. And now we need to apply taper relief. And taper relief is dependent upon the year's gap from the date of gift till the date of death. As the gift was given on 31st May 21 and Cora then died on 31st October 25. So it's like 31st May 21 to 22, 23, 24, 25. So it's like 4 years and few months are gone. 4 years and few months have been elapsed from the date of gift till the date of death. So when there happens to be more than 4 but less than 5 years involved, taper relief will be applied at the rate of 40%. So 40% of our tax liability will be reduced. 190,000 into 40%. Could you please tell me what actually it makes up? 76,000 pounds. Thank you. So our tax liability is going to be reduced by 76,000 pound, and resulting it is 114,000 pound, which is payable at the date of death. It is payable by donee. And there is one more thing we also follow while calculating death IHT on lifetime transfer, but not in the case of pet. In the case of CLT, if any tax has been paid in the lifetime, this is going to get adjusted against the final answer, but that's not going to be the case. Why? Because in the lifetime, this transfer was paid, no tax was charged in the lifetime. So practically speaking, one has to calculate death IHT on lifetime transfer on this first gift first, and it has used NRB on priority basis. And there eventually happened to be no tax liability to be paid by the niece, the donee of the first asset. But as it was not asked to be calculated, so I did not show the calculation, but its impact has surely been taken into account. So the answer is of 114,000 pounds. So this is option C, which is correct, right? Okay, now we are having another OT. It says that Rajesh is a sole trader. He correctly calculated his self-assessment payments on account for the tax year 25-26 and paid these on the due dates. All right. For any individual, there are 3 installments in which tax liability should be paid along with NIC class 4. The first two payments are called the payments on account as they are based on estimation, while the last figure is called the balancing figure. He has already paid payments on account, the 2 estimation based figures, and they were paid on their due date. So he was not late in paying them. But he paid the balancing figure, though the balancing figure was a correct amount, for 25-26 on 30th June 27. Right. So they are talking about the tax year 25-26. For any tax year, as what I've told you, that the first 2 payments, which are based on estimation, they are called as payments on account. The first payment on account had to be paid on 31st of January 27. And the second payment on account is to be paid on 31st of July after the tax year. And well, he is like done with these payments. They were paid by the due date. Now we have to pay the balancing figure. The balancing figure shall have to be paid by 31st of January after the end of the tax year, on which I need to know that what exactly the actual tax figure for the year is and how many payments on account we have paid. But here I need not to uh, struggle with this thing because they have said that the balancing figure is £1,200. So I just take it as it is. But this was the due date. This was the due date, the deadline. And when they paid it off, this was paid on 30th June 27. So now you could see that the balance has not been paid on time. For how many months we have delayed paying it off to HMRC? What time gap is involved? How many months are involved? These are actually about 5 months, right? So we are late for 5 months in paying our relevant balancing figure, on which, of course, one shall have to bear the interest and additional penalty will have to be charged as well. Interest is something which keeps on increasing with with the time that is being passed. So if further time will be lapsed, of course, the interest will be changed. But penalty is something which is like fixed for a certain period. Okay, so Rajesh is 5 months late, on which we shall be calculating interest on overdue or underpaid taxes, which for which the rate is, I guess, 8.5%. If you're not confident about this thing, then you may use this tax table to let yourself know that what exactly the default interest rate is, as it will be mentioned over here as well. Can't find it, but this has to be there. Okay, there you go. See, this is 8.5% being the rate of interest on underpaid or overdue taxes, as what I've told you people before. So 1200 into 8.5%. And this percentage is meant for a year and he is just 5 months late. Could you please tell me that how much of the interest he shall have to pay in this regard? That's going to be of £43. Thank you. And then the additional penalty will be charged as well if the balance is delayed for a period of up to 28 days. I mean, if within the due date one settles down the balancing figure within 28 days, then there happens to be no additional penalty. But I mean, here that's not going to be the case, that they did not settle the liability, the balancing figure in 28 days. Rather, they took 5 months. So 28 days or 1 month, that would mean the same thing. If the balance is going to be settled in more than one, but up to 6 months, then additional penalty will be charged at the rate of 5% of the balance. So what exactly the balancing figure is, it's of 1200, on which penalty shall be charged at the rate of 5%. If one goes late, I mean, if more than 6 but less than 12 months are involved in paying off the balancing figure, then instead of 5%, additional penalty at the rate of 10% will have to be charged. And this will then be increased to 15% if someone delays their balancing figure for more than 12 months. But here, as it is like falling in this bracket, so only 5% shall have to be paid. Could you please tell me what actually makes up 5% of 1200? 60? Okay. So 60 is the additional penalty that they have to pay. And this is not to be apportioned on monthly basis, because this is penalty. This is like carrying a feature of being fixed one. So penalty is 60 and interest is 43, right? Just reconfirm, 43 pound is the interest being charged and 60 pound is the penalty being charged. Now, do you people have any concern with respect to this question? The question is that are we given the rates for penalties on payment on account and balancing figures in the table? Also, no. Additional penalty is something which you need to learn. It is just an official rate of interest and the interest on overdue as well as interest on overpaid taxes. These are given in the question paper. You may confirm about this by looking at this tax sheet once again. So the rest of the penalties are to be crammed. See, first of all, I'm just going to go over it again. We figured out that the due date, the deadline for paying off the balance is 31st of January 2027, but he delayed it till 30th of June 27. So there's a gap of 5 months. If payments on account are not made on time, and so with the balancing figure, then interest will be charged at the rate of 8.5%, and that is going to be taken into account on the basis of months involved from the due date of payment till the date it was actually paid. So the interest on overdue taxes is charged at the rate of 8.5%, and 1200 is the balancing figure on which this interest implication will charge for, with respect to 5 months. That leads to an interest of 43 pounds to be paid. And for additional penalty, there is like a criteria. If balance is going to be settled within 1 month, I mean within 28 days after the due date, then there is going to be no additional penalty. But whosoever is going to delay it for more than 1 month, but up to 6 months, as he has delayed this balance to be settled after 5 months, so they are falling in this bracket, according to which 5% of the balance shall have to be paid. So 5%, and do not apportion it. It is straight away applied, of 1200 shall have to be paid, which makes up 60 pounds to be given to HMRC in the form of penalty. All right, now we are heading towards another question. It is related to company Oblong Limited has had the following results. For the previous year ending 31st March 25, their trading profit figure is of 79,400 pounds. The property business is of 1,600 pounds. If the company makes a claim to relieve its trading loss of 102,800 pounds, which is like relevant to the next period, against total profits of the year ended 31st March 25, how much of this loss will remain unrelieved? Okay. Now with companies, you may not straight away carry back your losses. First, you will have to make an adjustment of the loss in the current period. And if the loss is still left behind, then the excess value can be carried back for the previous 12 months. This is a different case for individuals, as individuals can freely carry back their losses. They are not dependent on making the current year claim first. Right. So as the company's format is quite simple and straight, for the year ended 31st March 26, the profit, rent, interest, capital gains, every income that a company is receiving, that shall have to be taken into account except for dividend, because dividend is an exempt income. Here, if I look at the results for year ended 31st March 26, we have a loss of 102,800 pounds. So whenever we have a loss, we present it as 0. Then we have a property business income of 10,100. The rental income is of 10,100. There is no information about interest or capital gain. So in the current period, as I said, that it is must to make an adjustment. An adjustment shall have to be made against total profit before deducting QCD. Now, QCD is of 1300, but before that, I need to make an adjustment of losses. See, though the loss figure is of 102,800 pounds, but of course, against 10,800, the maximum adjustment has to be made, and the maximum loss that I can adjust over here is restricted up to the value of total profit. I cannot go beyond that. And that's how much of the profit is gonna be left behind, that's zero. And QCD is gonna be wasted. And the taxable total profit will now become zero. That would mean there is going to be no corporation tax liability. Well, we had a loss figure of 102,800. Now I can carry it back, right? As they have demanded to carry back the losses, and I was like, conscious enough that this is the case of company. Companies cannot straight away carry back their losses. They will first have to make an adjustment in the current period, and then they may carry it back for the previous 12 months against total profit before QCD. And in the previous period, we have a trading profit of 79,400. The rental income of 6,800, which we also call as property business profit or property business income. There is no interest or capital gain. So the previous 12 months total profit figure is, could you please help me out in summing up these two figures? 79,400 and 6,800 makes up what? So the total is equal to 86,200 pounds, right? 86,200, as the loss figure was of 102,800. We had to make an adjustment in the current period of 10,100. And now how much of the loss is still left behind? That is going to be of 92,700 pounds. Well, the total profit for the previous 12 months is of 86,200. The maximum adjustment has to be made, but here the maximum loss that we can still adjust over here is restricted up to 86,200. Well, QCD for the previous period will also go wasted, and the taxable total profit will become zero. So even after adjustment of 86,200, how much of the loss is still left behind? That is of 6,500 pounds. How much of the loss is still left behind? That is of 6,500 pounds. We cannot carry it back further. I mean, carry back for the previous 12 months can be done, but not, we can't go beyond that in case of companies. And this loss is not going to be lost. This is not something which is going to be wasted. This is like going to be taken to the future accounting period. Now it is going to be adjusted in the future accounting period. I mean, the period which is coming next after the period of loss against total profit before QCD. But then in the future, we even may make partial claims. We are not supposed to make full claims. The partial claims can be made. But if the question is about the loss being adjusted in the previous period, then answer has to be 86,200. But in this case, what they have asked that how much of the loss is going to be carried forward to the future period. I mean, how much of the loss is still left even after making an adjustment against the year ended 30th June 25. See, they said that after making an adjustment against 31st March 25, how much of the loss is like still left unadjusted, unrelieved, and this is of 6,500 pounds. Is this thing clear? No. For the current period, for the previous period, and even for the future period. In case of companies, the loss has to be adjusted against total profit before QCD. It's always total profit before QCD, but there is one more thing. If one company is going to surrender their own loss to some other company, and that other company is going to make an adjustment of the loss being surrendered to them, then they may make an adjustment against total profit after QCD. But this is for the recipient company. The company who has made the loss, they either choose current year or they choose the previous year or the future year. The adjustment shall have to be made against total profit before QCD, right? Now here comes 13th OT. It says that putting an asset into joint names with a spouse or a partner in a registered partnership prior to the asset disposal can be a sensible CGT planning. Which of the following cannot be achieved as a direct result of using this type of tax planning? See if there is an asset which is owned by an individual. If he is going to transfer half of the ownership to the spouse or civil partners, that would mean that when the asset is sold to the outsider, because when they are going to transfer half of the ownership to the spouse, there is going to be no tax implication at all. And when the future disposal to any outsider is made, only half gain is chargeable upon each spouse, on each person. And they both then be able to utilize their annual exempt amount. So altogether, we'll have an annual exemption of £6,000 to be available instead of just £3,000. And both of the individuals will be able to adjust their current year as well as brought forward capital losses. And that's how they will be able to relieve their losses against it. Their gain gets reduced down and the relevant tax liability will be reduced, of course. And both of the individuals, when they'll be able to utilize their available basic rate band as well. So this is how it is an effective tool of mitigating your tax liability. It's a sensible tax planning approach. But what cannot be achieved? Okay. You are having 4 options in front of you, and I have given you a summary of what is a sensible planning tool behind this thing. What cannot be achieved while transferring half of the ownership of the asset to the other person? Can you please tell? Okay, I've just got one answer. And that is correct because both of the individuals, though their respective tax liabilities will be reduced, but their respective tax figures shall have to be made to HMRC by the same due date. You cannot delay the taxes to be paid to HMRC. Deferring of the taxes cannot be achieved. So this is something which may be achieved with the help of applying rollover relief or the holdover relief or gift holdover relief, but that's not something which we can achieve by transferring the ownership of the asset to other spouse or the civil partner. Second last OT of Section A is here. It says that Eva's income tax liability and Class 4 NIC for the tax year 25-26 are £4,840. Her income tax liability and Class 4 NIC for the tax year 24-25 was £6,360. Okay, so they have told us what the overall tax payable in NIC for the current tax year and what was the situation for the previous tax year. What is the lowest amount to which Eva could make a claim to reduce each of her payment on account for the tax year 25-26? People, can you notice that their current tax year's tax payable in NIC 4 is lower as compared to their previous year? Usually what happens is that whatever has happened in the previous tax year, the sum of tax payable in NIC 4, which is 6360, that is picked up and its 50% is paid as first payment on account and second payment on account. But if you find that your current year tax payable is lower as compared to what has happened in the previous year, then one may make a claim. I mean, this is optional. You may make a claim to reduce your payments on account for the current tax year, and they can be reduced by taking 50% of not the previous year figure, but maximum up to the figure which is relevant to the current tax year. So 50% of 4840, the current tax year payable and NIC 4 can be picked up to this value. The payments on account can be reduced instead of like taking up the previous year's tax payable and NIC 4 figure, which the usually the case is. So what exactly 50% of the current year tax payable and NIC 4 figure is? By the way, they did not say that this is a tax payable, this is tax liability. But see what the difference in between the tax liability and tax payable. Against the tax liability, when individual deducts the payment of taxes which have been made during the year, which have been made at source, as in pay as you earn system is a famous system through which taxes of employees are paid during the year, then whatever the amount is left behind, that is tax payable. If they haven't told us about Eva's tax payable, then I believe that there is no payment made during the tax year. So her liability and payable is same. And technically we pick up the payable if liability and payable is same, so that means the same thing. But if you were given with both figures, the liability and the payable, you had to pick up the payable figure. Okay, so what the current year figure is, this is 4840. So instead of taking 50% of the previous year, I'm going to take up 50. Sorry. Percent of 4840 pounds. That is of 2420 pounds. Okay, I'm just going to mention 2420. No full stop, no dash, no slash, no comma. Whensoever you are handling a blank space, this is called as hot area as well. When you are dealing with the blank space, when you are dealing with the hot area, you will not be inputting any extra character. For instance, if I am trying to put full stop, see, there is going to be a prompt that this is not going to match with the expected format. I mean, only the numbers are to be inserted. Is this thing clear? But yes, when you will be dealing with constructed response questions, if you want to, you may use commas and all, but not with section A and section B. Okay, so the last OT of section A, it says that Lilly Limited commenced trading on 1st of January 2025. The company incurred the following expenditure before 1st January 25. See, either it's about a company or a self-employed person. Whensoever they are going to start their trade, whatsoever the expenses they have incurred in the last 7 years, they are deductible provided they are of revenue in nature and they are allowed for tax purposes. Though in case of individuals, we have two choices, the cash basis and the accrual basis. But in both of the cases, we are allowed to deduct the expenses that have happened in the last 7 years. But in case of company, see, this is the case of company. Company will have to deal. Company will have to deal with the expenditures that has happened in 7 years prior to the start of the trade. And company is always using accruals approach, whether it is about trading profit adjustment or rental income adjustment. It is only the accruals approach that they use for the sake of adjustment of their profit. Okay, so January 25 is the starting date. Just see from where the 7 years are starting. They must be starting from 1st January 2018. Right? So 1st January 18 till 1st January 25, that makes up 7 years prior to the start of trade. The first expense happened in 2017. So this is like out of the question. This is out of the scope. This is not falling in 7 years. So we cannot deduct this expense against trading profit. Though it's a revenue expense, it's a research expense, but unfortunately, this has happened long ago, not in 7 years prior to the start of trade, so it is not permissible. Then another research was conducted in 2020, and yes, being a revenue expense has happened in 7 years prior to the start of trade, so this 12,000 is definitely deductible. Then another expense incurred in 2024. It is about entertaining customers and suppliers, I mean, third party entertainment. Though entertainment is a revenue expense, but it is otherwise not an allowed expenditure. Do you remember that while calculating adjusted figure for profit, if there happens to be an entertainment done for third parties, it is not an allowable expenditure. So expense has to happen in 7 years. It has to be revenue in nature, and it is tax allowable expense. This is not tax allowable, so I am not going to deduct this £8,000. And then in 2024 December, again in 7 years prior to the start of trade, donation was made. See, donation is something which is a routine expense, and we need to see if it is permissible, tax allowable or not, to local school fair in exchange for advertising. So yes, it's a mere expense that one need to take into account. But still, I want to have your opinion about it. How many of you think that this donation expense is to be taken into account? I mean, according to you, is that to be treated as an allowable expense or not? See, this is an allowable expense, right? As it is a revenue expense, only one donation is disallowed, and that is donation to the political party. This is an allowed expense, but yes, there is one difference. As I hope you remember that there is a point in trading profit section that if there happens to be any donation paid for the sake of, like, wholly and exclusively for the sake of trade, it is being made to any local organization, and it is of reasonable in value, then this is an allowed expenditure. See, this is like being made to a local organization. It is a reasonable in value. So this is like an allowed expenditure. Otherwise, all the national level based or organization to whom donation is paid, the expense is not deducted as an allowable expenditure, but still the expense is treatable, not in the form of deduction against trading profit, but in the form of QCD, a qualifying charitable donation. But that's not the case over here. While donation to political party is neither deducted against the trading profit figure, nor it is to be given a status of QCD. So this is like totally a no status given to that thing. So 12,000 and 2,000 altogether 14,000 is deductible. So I'm just going to enter the digits only, right? So this is how we are done with section A completely. If you people have anything in your mind, please let me know by dropping your concern in the dialog box. There's a question in front of me that what is the difference in between the pre-trade expenditure for individuals and companies? Well, there is no difference at all. All the revenue expenses which have been incurred in 7 years before the start of trade, if they are like an allowed expense for trading profit adjustment purposes, then they are deductible against trading profit. It's just that this donation based this donation based thing is a little confusing, because against the trading profit, if donation has been made for the sake of wholly exclusively for trade, and it is of reasonable in nature, and it is like made to a local organization, then it is deductible against trading profit, whether it is about individual or companies. But I was like telling one extra thing, that if these either of these three conditions which make donation to be a tax permissible expense, if any of these three conditions is not met, then if it is like treated as disallowed expenditure for trading profit calculation purposes, even then it is treated as an allowable expense, and it is deducted against uh, company's performer in the form of QCT. I mean, this is not gonna be ignored at all. but tax permissible situation for both individuals and companies are same. And one thing is same once again for both of them, as donation to political party is strictly a disallowed expense. Okay, now as I was saying that we are now heading towards section B. Before that, I start with section B, as I believe that we may still deal with one question of section B, though we have got 3 OT cases related to section B. In this session, what I have taken you through, I have told you that what exactly the format of your exam is, that and how you will be like taking into account certain points, how you will have to divide the time and all. And as what I've told you people before, that obviously in tomorrow's session, we'll be discussing section C, where I'll tell you that how the spreadsheet and the Word document has to be handled. And there I'll be sharing the list of important questions, important section C questions with you people, though I strictly say that you need to go through all section A as well as section B questions. And well, along with that, I'll be sharing the pocket notes with you people as well, right? So this is basically the main thing that I had to discuss with you people in today's session. And okay, let's take a start with section B. We may do one OT case at least today. We'll try if we could go through the second one as well, but at least this one is like easily manageable. Okay, start reading the OT case. I hope you know that the size of the screen can be changed. So while at the time you're reading the question, you may increase the size of your screen. Kindly read the OT case first. So students, have you gone through the question entirely? Students, are you done reading the question? Is my voice audible? All right. So now I am going to take you to the first OT of this OT case. It says that what is the maximum nil rate band which will have been available while calculating IHT of £566,000 payable in respect of Adana's chargeable estate. Okay. So see, according to the question, Adana died on 17th of March 26, and this is her IHT on her death estate. I mean, when she died, whatever she did not distribute in her lifetime, that becomes a part of deceased person death estate. And on death estate computation, we will never be classifying the transfers as PET or CLT. Whatever is like left by the time the donor dies, by the time the person dies, that is like going to be chargeable to IHT, and residual legatee is the sufferer of the taxes. And see, they are asking that while calculating IHT on death estate, for which the answer is £566,000, how much of the nil rate band we have used. And of course, nil rate band is used while taking into account that what chargeable transfers we have made in the last 7 years, right? Okay. When Adana died, um, all of her estate were given to her children. They were bequeathed by her children. And the date of her death, she had the following debts and expenses. And when her husband died previously, on 28th of May 2006, back in the tax year 2006-7. And by the way, by the tax year 2008-9, the NRB figure kept on changing every year, but it remained fixed starting from the tax year 2009-10. Every year, NRB is announced like separately for a specific tax year, but the value is £325,000 for each tax year in question. And it says only 20% of his inheritance tax nil band was used on his death. The NRB was at that time, see, it was 285,000 pounds. And if someone's husband or the civil partner, I mean spouse, has not been able to utilize either of their nil band or the residence nil band, then whatever the nil band is like left behind, that could be used right now as a result of calculating death IHT and IHT on death estate of the second spouse, I mean, at the time of their death. Okay, and well, besides that, on 22nd of April 2013, Adana had made a chargeable lifetime transfer of shares valued at £500,000 to a trust, and Adana paid the lifetime IHT of 52250 arising from this gift as well. If she had not made this gift before, then the chargeable estate would be £650,000 more than it otherwise was. Now, the thing is, uh, see, the question itself is not very technical, but it has been presented in a very technical way. So for the sake of like dealing with such complications where otherwise maybe majority of you have a good understanding of inheritance tax aspect, and well, the concept of inheritance tax is like a very simple one as far as your syllabus of TX is concerned, but the way the question has been presented, that makes it complicated. Okay, so I am going to pick out few things and trying to arrange it in a date-wise manner, in a chronological manner. So the oldest date is the date 28th May 2006, when Adana's husband died, right? So 28th May 2006, this is the date which is falling in the tax year 2006-7, when Adana's spouse died. They might have asked us to calculate IHT for her husband, but they did not say so. But they said that when her husband died, at that time, NRB was £285,000 and he had made use of only 20% of it. That means that if he had used 20% of NRB, then 80% of the NRB was still left behind, right? So 80% of NRB was left behind, and this could be used while calculating death IHT on lifetime transfer as well as IHT on death estate. I mean, at the time of calculating IHT related to second spouse death, but this remaining percentage will no longer be applicable on the old dates. Rather, whatever the NRB existing according to the tax year of Adana's death, that shall be applied. So when she dies, she will be having 80% of her NRB, I mean 80% of £325,000. Okay, I have stated one fact. And then the next date is April 13, when she has made a transfer. 22nd April 2013, well, this date is falling in the tax year 13-14. And how much of this is the lifetime transfer? She made it in her lifetime. This is the transfer of value of £500,000, right? So be very careful. This is not the chargeable estate. This is only the transfer of value. This is the value of the asset being transferred. Against this, of course, the relevant exemptions will be deducted, and then we come to know what the chargeable amount of gift is. But they just simply said that it was a transfer made to a trust, so it was a CLT, and we technically do not need to calculate IHT because they themselves have calculated, they have themselves given us the value of IHT. So why do we need to go through the entire process? The tax figure is of 52250. And this is the lifetime IHT. When she was alive, in her lifetime, this IHT has been charged. And it is just, by the way, said that if she had not made a gift, then right now This was left undistributed by the time of Adana's death, and its value is the value of her estate is 650,000 more. Right. And now when she died, she is having some death estate figure, which they did not give us. Rather, they have told us straight away that whatever the estate is, after picking up the assets, deducting these liabilities, then deducting NRB, this is the final answer of £566,000. This is inheritance tax figure, which is an IHT on death estate, right? And while calculating IHT on death estate, how much of the NRB applied against her death estate figure? Okay, when Adana died on 17th of March 2026, when she died on 17th of March 26, this is the date which is falling in the tax year 25-26. I do not know what her assets value was, and liabilities are otherwise given. And then whatever the value is left behind, exempt legacy is no more in the question because her husband is already dead. But then they are asking what NRB that we may use. NRB of the year of death can be used. So NRB of the tax year of death is of £325,000. And C, it needs an adjustment for the chargeable transfers made in the last 7 years. Though we pick up 7 years prior to the date of gift, but in case of death estate, I mean, in case of those things which are transferred as a result of someone's death, the date of death and date of gift are taken in the same capacity. So either you take it as a date of gift because Adana died and things were transferred, or you take it as a date of death, that is one and same thing. 7 years prior to this date shall be starting from 17th of March 2019. In these 7 years, if you just have a look at the question, she had made only one transfer, and that's so back in 2013. This is not falling in last 7 years. So nothing has been transferred in the last 7 years. So whole of her NRB is available. And do not forget that when her husband died, he did not make use of 80% of his NRB. And now, as a result of Adana's death, the leftover NRB of her spouse can now be claimed, but this is going to be claimed by the personal representatives to set against the death calculations. And 80% according to the new value, according to the current value, shall be provided. So what is going to make up 80% of £325,000? Could you please tell me? £260,000. So altogether, how much of the NRB is there? £585,000. This is the maximum amount of NRB which Adana, which is going to be used at the point of like calculating IHT on death estate. Well, against death estate, one may use RNRB as well, but for that purpose, someone's death estate needs to include the main residence for which no information is given. So I will not be thinking about the residence related band of Adana herself, or even if that was like something left behind at the date of her spouse death. So this is like something which I'm not going to take into account. All right, so £585,000 is the maximum NRB which is available. So first I just made a plot. I simplified the things. I arranged the events according to the date in a chronological manner. And then it became a little bit easier for me to pick up the things. Is this thing clear? All right, now we are heading towards another OT, which says that what is the total amount of deductions which would have been permitted in calculating Adana's chargeable estate for IHT purposes. See, first of all, we take up the market value of all the assets which are there at the date of someone's death, and then the liabilities are to be deducted, but the verbal promises, any illegal, illegitimate sort of liabilities, they are not deductible. So, and with mortgages, it's only interest, only mortgage and the repayment mortgages which are deductible. And if it is said to be an endowment mortgage which carries an element of insurance in it, so insurance company will take up the responsibility to pay off the mortgage, and it is not deductible against the death estate of a deceased person. 220,000 pound is an interest only mortgage, so this is deductible. Then, when Adana died, her income tax of 43,700 was pending. It is a very legal, legitimate, constructive obligation which she was supposed to pay. But as she died, so this is going to be settled first out of her death estate. This is of worth 43,700 pounds. And then there is a legal fee of 4,600 pounds, but that is not her fee. That is of her sisters, which she had verbally promised to pay. So this is not a constructive obligation for her, which is why if she dies before fulfilling her promise, that is not going to get settled against her death estate computation. So 220,000 pounds and 43,700, these both figures could be deducted. Okay, so 220,000 and 43,700. Could you please tell me what is going to be the total? Okay, I just got an answer from you. 263,700. Thank you. So 263,700. Again, it's a hot area, it's a blank area, and I am supposed to insert digits only. This is the case which we follow with section A and section B. No comma, no full stop, no dash, no slash, no extra characters are to be produced over here. Now we are having another OT related to this OT case. This says that indicate by clicking on the relevant boxes in the table below who will be responsible for paying IHT of 566,000 pound in respect of Adana's chargeable estate. And what is the due date? See, when a person dies and there was some estate which was not distributed in his or her lifetime, then it becomes a part of deceased person death estate, which is paid by personal representatives, or you may also call it as their lawyers or executors. So personal representatives are basically responsible to submit the amount of taxes, but as they are being bequeathed by her children, whosoever is like said to be the residue legatee according to the will, whosoever is like going to be nominated as the person who will be collecting the leftover of the estate, he or she shall be responsible to suffer the burden of taxes entirely. For which they did not ask that who is going to be the sufferer. Otherwise, it is only one person who will be taking up the burden of the whole death estate. But the payment is to be made by personal representative, and the due date for paying IHT on death estate is basically the earlier of two dates. We need to see that when the account estate for a deceased person is going to be submitted to HMRC, I mean, the details of his assets and everything is going to be presented in front of HMRC, and when 6 months after the month of death will be elapsed. Out of these two dates, the earlier date will be considered as due date. And in 99% of your questions, you will never be told about the date on which account estate got submitted to HMRC. So we are just left with one option, and that is 6 months after the month of death. As she died in March, so just skip March, and then we have April, May, June, July, August, September, till the end of September, complete 6 months after the month of death. That is basically dictating the due date by which IHT on death estate shall have to be paid. So that's 30th of September 26 in this case. Is this thing clear? Now we have another OT which says that how much of the IHT payable in respect of Adana's estate would have been saved if, under the terms of her will, she had made specific gifts of 400,000 to a trust and 200,000 pound to her grandchildren instead of leaving her entire estate to her children. Okay, you want me to repeat that? I'm going back. The due date for the payment of IHT is 6 months after the month of the death. So, which is like 30th September in this case. And in case of death estate, actually, there are two personnels involved. One who will be suffering, who will be taking up the burden of the taxes, and for which the information will be guided in the question, as if someone dies and his legacy is being distributed, for instance, amongst 15 persons, then not 15 persons will be responsible to pay off the taxes. Rather, it is only one out of the whole lot to whom the tax payment shall have to be come. Is only one person who will have to take up the whole burden. Though it seems to be a little unfair in the start, but see, the thing is, if someone dies and his entire estate is gonna be distributed amongst, let's suppose, 85 people, then what do you think? The government, HMRC, would be running after 85 people to recover the amount of taxes. So there is only one person to be nominated as a residue legatee in order to suffer the amount of taxes. But who will be submitting it in the deposit account of HMRC, who's like going to hand over the figure of taxes to government? That is their lawyer, who is responsible to execute the commands given in the will, to whom we call as personal representative. The same person can be called as executor. So executor, lawyer, or personal representative, that is the person who will be submitting the amount of taxes, but the sufferer is residue legatee. This is the concept with IHT on death estate. Well, death IHT on lifetime transfer is a different thing. All things which were transferred in the lifetime of a person and the person dies within 7 years, then death IHT on lifetime transfer will be paid by the person, will be paid by the donee, the recipient to whom the asset was transferred. Clear? Children are the sufferer. In fact, one of the children will be the sufferer, but the payment, the submission of the amount to HMRC will be like done by person representative. Yes, this is the liability is like transferred to children. The assets are given to the children, but the payment of the taxes will have to be made by the person representative. So, for instance, if Adana had, let's suppose, three children, she must have nominated only one of the three people to be treated as a residue legatee. So that person will have to take the burden of whole of the taxes. So do not think that this is like always going to be an unfair thing, because there could be a chance that Adana would have transferred a little bit higher estate to that person who was eventually be nominated as a residue legatee, so that he will be like getting more and he will have no objection in like settling down the taxes himself all alone, right? Okay, now there is like another OT which says that how much of the IHT payable in respect of Adana's estate could be saved if, under the terms of her will, she had made some specific gifts of 400,000 pound to a trust and 200,000 pound to her grandchildren, instead of leaving her entire estate to her children. See, she did not transfer. The question is, the personal representative is one of the beneficiaries? No, never. That could be an exceptional case if the person representative is the beneficiary as well. Usually the person representative is like a separate person. See, if a person dies and he had 15 relatives to whom the property was to be transferred, if out of those 15 people, if one is like given the commands, if one was like given the authority, if he was like not just the beneficiary, he was the executor as well, then there are 100% chances there that he would be manipulating about the terms of the will. He may change the directions of the will, because the relevant person is dead and he's like having all in all command related to the will. So usually it is never done. He is just the transferer. See, he's just the agent. He is not taking out any money out of his pocket. He is just the agent to pay. He is the responsible person to submit in front of HMRC officer to pay off the taxes, but he is not going to compensate the liability by himself at all. Is this thing clear? I mean, you may say that person representative and an executor, he will pick up the amount of tax from the residue legatee and transferring that amount to HMRC officer. So he's just an agent. Okay. So as Adana died, and there were like few things which she did not transfer in her lifetime, and I am repeating this thing again and again, that they did not tell us that how many assets she had by the time she died. They did not tell us that how many estate values she was like possessing by the time she died, though they told us that what eventually the tax figure was, that was of 566,000 pounds, but they did not tell us the main figure on which this tax liability has been arrived at. But they say that out of her estate, if she had given 400,000 to a trust and 200,000 pound to her grandchildren, instead of like giving everything to her children, which is the case over here, as she had left everything, the entire estate to her children, if she had made a little bit change in her will before her death, that out of the all of her wealth, she had redirected 400,000 pound to be given to a trust instead of her children, and 200,000 pound to be given to her grandchildren instead of her children, and then she died, then how much of the tax liability could be saved at the point of calculating IHT on death estate of Adana? How much of the tax could be saved? Do you think, can there be any immediate saving of taxes achieved in this case if she had changed the terms of her will, and instead of leaving everything to her children, she would have left 400,000 pound to trust and 200,000 pound to her grandchildren? Would there be any change to her IHT? Is a gift okay, I'm going to change the question. Is the gift made to a trust, or the amount to be given to grandchildren, will they be falling under exempt legacy rules? Is it an exempt legacy? Is it like to be caught under no tax policy? I think exempt legacy is at your syllabus level is only one, and that is the spouse, right? So when Adana dies, whatever she had, which she did not distribute in her lifetime, IHT on death estate will be calculated. Whether the entire estate is given to any trust, whether they are given to her children, or whether they are going to be given to her grandchildren or to anyone else. If she had anything by the time she died, then IHT on death estate will be calculated in the same way. But yes, IHT on death estate could be reduced if she had left something to her spouse, which is obviously not possible because her spouse is already dead. So the thing is, but that could be the mere remote possibility of reducing the taxes which were to be due at the point of her death, but that's not the case over here. But yes, it will have a future impact, as whatever she's going to leave with her grandchildren, if she is going to leave anything to her grandchildren, when her children would die, they will not be having those assets. So no IHT will be charged as a result of Adana's children death, and they will be deferred till the death of Adana's grandchildren. But this is like a future implication. This is a tactic through which one may become able to save taxes, likely taxes which may happen in the future, but it is going to serve no purpose right here in the current tax year. So, uh, I mean, at the point of Anana's death, unfortunately, no tax liability could be saved if the things are to be like redistributed to a trust or to her grandchildren. Um, there is a question, what about the planning measures of skipping generation? See, skipping generation is actually a measure to save taxes, but not something to meant to happen right now, but for the future purposes. Okay, let me just tell you. Let's suppose Adana, let's say her child name is Mike, and Mike has a child. So grandchild of Adana is, let's suppose, um, Ben. So if this is the case, Adana has, let's suppose, 8 assets which she did not give to anyone else in her lifetime and she died. So all of these assets will be caught under taxation rules. IHT on death estate shall be charged, right? So right now, on everything that she had by the time of her death, IHT shall have to be calculated. Now, to whom this is given? These are given to her child Mike. Now, who owns these assets? That is Mike. When Mike dies, again, on the next step, once again, inheritance tax on death estate will be paid. And then these assets are given to Mike's child, who is Adana's grandchild. Now, who owns these 8 assets? That is Ben. And when he dies, of course, IHT will be paid as well. And for the sake of getting these assets, of course, uh, one has to give away a major portion of the wealth as well, because IHT is always charged at the rate of 40%. So a huge amount shall have to be settled every time whenever a person dies and he had something with him. And now, if Adana would change the will, she has 8 assets, and she says that when she dies, nothing is to be given to Mike, rather, everything should be given to Ben. So, when Adana dies, she has these assets. Right now, no tax saving will be achieved. IHT shall have to be paid either way. But then these things are not given to Mike. So when Mike dies, he did not have these assets with him. So there's going to be no IHT at all at the time in future when Mike dies. And these all assets are now within Adana's grandchild. And when later in life, Ben would die, then IHT on death estate shall be charged. So, see, there's going to be a skipping of generation and skipping of future tax as well. But whether Adana will be giving anything to her child right now or to their grandchildren, as long as she is having those assets, so when she dies, an immediate charge to IHT shall have to apply. Is this thing clear? I mean, there's like no impact on the tax to be charged right now by making this strategy of skipping a child. Skipping a child may have a tendency to save taxes in future, but not in the current tax year. Is this thing clear? Okay, so the last OT of this OT case, it says that how much IHT did Adana save by making the chargeable lifetime transfers of £500,000 to a trust on 22nd April 2023 rather than retaining the gifted investment until her death. See, she has given away an asset to a trust back retained till her death, then the asset value will have been increased to £650,000. This would then become a part of her death estate computation, on which IHT on death estate has to be paid. And what is the rate of IHT on death estate? That is done at the rate of 40%. So if she has kept this asset till her death, and considering she has few more assets as well against which the NRB must have been adjusted, On this value, if this become a part of her death estate computation, an additional tax liability will have been paid, and IHT on death estate is charged at the rate of 40%. So how much of the tax she, had to be borne as a result of Adana's death, because this transfer was then become would then become a part of her death estate computation. This is of 260,000 pound, and this is quite huge. But luckily, fortunately, this transfer has already been made in her lifetime. And how much of the lifetime IHT she had to bear? That was just of 52250. Had she not given away the asset in her lifetime, though she couldn't have to pay any tax in the lifetime, but retaining the asset till her death would mean that her death estate would have been increased by 650,000 pound, on which 260,000 pound worth of IHT had to be paid. So thankfully she had made a transfer in her lifetime, and thus we may say that she has saved a tax figure of 207,750 pounds. Otherwise, instead of paying 52,250, she had to bear 260,000 pound. Additional amount of 207. Extra amount of 207,750 had to be paid, which is luckily now being saved. Is this thing clear? See, we are comparing that, considering she has given away this asset in her lifetime and they have given us the value of the tax which she has actually paid. This is done. But had she not given away this asset in her lifetime and it remains undistributed till her death, then it must have been added into her death estate, increasing her death estate with a value of 650,000 pound, because the asset which was like given away in 2013, by the time she died in 2025, the value of the asset was increased to 650,000 pound, on which we know that IHT on death estate shall have to be charged at the rate of 40%. So how much of the tax has to be borne if this asset would be treated as a part of her death estate computation, that is of 40% of this value? That's of 260,000 pound, but luckily she has given away this asset in her lifetime, and only the tax of 52250 had to be paid. So technically her wisdom has let them save the taxes of 207,750 pounds. And this is like something you must have gone through as an advantage of lifetime transfers to be preferred over death estate, because obviously in the lifetime the value of the asset is lower. We have multiple exemptions available. We do have even taper relief availability and all. There are several factors which lead to result into a reduced amount of taxes. So this is like something which he has been able to save this way. All right. So in today's session, I did go through certain things, and I have started discussing a practice set one with you people, and I've told you people, and this is a strict Maya, that you need to take into account, that you will not be opening up each and every past exam attempt on the study portal, because all of them are not adjusted. But I have indicated which ones are relevant for you people. And see, in today's session, I have gone through section A entirely, and one OT case has been done as well, right? And there is like few more tips I would like to give you people, but that would be given to you people tomorrow, along with the list of important questions, the pocket notes, and I'll be sharing a sort of timetable with you people, that how you will have to organize your 10 days prior to the exam day.
So, is there anything else you have in your mind? If yes, then please let me know.
Have you been able to take any benefit from today's session? Was that fruitful? Did you learn anything? Yes, the session is being recorded and the recordings will be given to you people on Saturday. I mean, this 2 day session will be completed first and then the recordings will be given to you people. And for every student, it will be made available because this is like given a YouTube link as well. Yes, we'll be having another session as well where we'll be completing the rest of this practice set. And by the way, students, whosoever is like already enrolled must be a part of our global groups. But if you people haven't had a chance to become a part of our global group before, everyone, whether you are enrolled at VIFHE or not, this is the link to our global group. And this is like a very effective open community for those students who are going to take up their exam in June 2026. You will find multiple students over there who are in the same boat who are going to take their exams in June. You may have like multiple people to interact with for the sake of like getting resources, for the sake of like sharing your concerns and asking questions and all. I'm going to share the link in your chat box as well, so that if you haven't uh, yet joined our groups, then please be a part of it. The link of the recording will be provided on the YouTube, so you may just share it as well. I mean, you may just access it through the links given to this global groups, or you may randomly search it by inserting key features. I mean, if you just write game changer webinar session TX English, then obviously you will be able to find it out. Otherwise, if you become a part of our global group, then this link to YouTube shall definitely be provided to you people. Right? And now I am going to share my contact number with you people. If you people come across any issue later on, then you may ask about your query. So this is my WhatsApp number. You may contact on this number, right? Okay, is there anything else which is like still there in your mind? If yes, then please drop it down in the dialog box and afterwards we'll wind up the session. All right, so considering there are no more questions from your side, the time has come to wind up the session. Thank you so much for being a part of this session. Would join once again on the same time tomorrow. So try taking that session as well. Thanks once again and goodbye.